Hello, today we are going to solve October 2023 paper question number 5. Banuja started a business making wooden garden furniture on 1st October 2022. He decided that to start with, he would concentrate on making and selling a single product, the garden seat. Banuja started the business with the manufacturing equipment of 2000 and a bank balance of 4000, and he has no training in accounts, but at the end of the year of trading he prepared the following profit statement. And we can see that there is some additional information at 30th September 2023. Now let's start to solve the first problem. 5a, explain the following accounting concepts and convention. First one is a business entity. The transactions of the business and the transactions made by the owner for personal reasons must be kept separate in the accounting books. Owner's transaction should be recorded as drawings in the accounts. Then, as per the realization concept, it states that any profit, should be recorded in the books only when an actual transaction occurs. So not because they will occur or be promised at a later date. For example, sale should not be recorded in the accounts if a customer has promised to buy goods at a later date. Then as per the accruals concept, the revenue must match with the expenses incurred in that period. So any prepayments or accruals you will have to adjust so that it shows the true income and expenses which is incurred only for that period, so that profits are not distorted. Now second one, part B, calculate the total production cost for the year ended 30th September 2023. Now let's calculate the total production cost. This is like a manufacturing cost. So what are the things you have to include? One is the raw material which is purchased less the closing inventory. So assume raw material consumed, and then I will add any direct wages you will add to get the prime cost. You will also calculate overhead costs, which is incurred. Overhead costs are some production expenses and depreciation of the manufacturing equipment or any indirect expenses related to production. So, and anything that goes into the income statement, you will have to see which doesn't contribute, the expenses that don't contribute to the production, you have to include in the profit and loss statement. The raw material purchase was 5,500, so that we have to subtract it. So less the remaining value of the closing inventory of raw materials. Raw material was consumed 4,500. Then we have wages. The wages paid, only one, so 9,000, but it included 5,000 as drawing, so you will subtract it. So 9,000, 9,000 minus 5,000, so only 4,000 is related to production wages, so 4,000. Then now we will have to calculate the prime cost. So let's calculate the prime cost by adding these two costs. So this is going to be my prime cost, 8,500. Then apart from that, indirect costs or the overhead costs are also there in the business. First one is the production expenses. So that is 3,800. Like it could be from electricity, anything, all put under the use for production. Then you will have depreciation on the manufacturing equipment. So the manufacturing equipment was at the beginning 2,000. Now the manufacturing equipment is valued at 1,600. So let's calculate the depreciated value. So it is equal to 2,000 minus 1,600. So the amount is 400. So 400. Now production expenses were at 3,800, of which 700 was owing. So we will have to adjust this also. So 3,800 minus 700, the prepaid expense, so it will become 3,100. Okay, so 3,100. So now let's add up the total overhead cost. So the total overhead cost is 3,100 plus 400, that is 3,500. Okay, 3,500. Now let's add up this 8,500 plus 3,500. Its value is going to be equal to 12,000. So 12,000 is going to be the production cost. Now second part 2, profit for the year ended 30th September 2023. So let's start with the revenue. Okay, the revenue is, it says that here 90 during the year 100 garden seeds were made, out of which 90 was sold to the retailer at a price of 200. The revenue earned will be equal to 90 times 200, that is equal to 18,000, out of which you can see that, okay, out of which we can see that 16,800 was through the cash and 1,200 was through the trade receivables. It's a credit sale. Okay, so then we have the cost of sales we have to calculate. Okay, cost of sales is calculated from production cost. Okay, if you have opening inventory of finished goods plus the production cost minus the closing inventory of finished goods, and then I'll be able to get the cost of sales. Now the production cost was around 12,000. Okay, so let's write that. So 12,000. Now the less the closing inventory of finished goods, there was no opening inventory of finished goods, there is closing inventory of finished goods. We know that 90 was sold, which means 10 must have been left. If I had made 100, my production cost would be 120 per unit, right? So the closing inventory is also valued at the production cost, not at the selling price. So 10 times 120 is the production cost. So that much I will have to subtract. Okay, so let's calculate this. So that is equal to less 1,200, 10,800. Okay, so 10,800. Gross profit is 18,000 minus 10,800, that will be around 7,200. Okay, is the selling expense. So 2,300, 2,750. 2,750. Now let's calculate the profit for the year. So 7,200 minus 2,750. So that is going to be equal to 4,450. Next one is calculate the bank balance at 30th September 2023. So here we can see that he started off with a bank balance of 4,000. So let's write here on 1st October 2022, the balance brought down, okay, in his account was around 4,000. So it was 4,000, and then okay, whatever the, then he got a sales receipt of 16,800 on 30th September 2023. So 30th September 2023, he got from the sales, okay, sales of cash receipts. Okay, he got a cash receipt, so that is equal to 16,800. So this can come from the, this one can come from the sales account or the revenue account. Okay, you can write. Then you have other things that's paid by the business. So raw materials purchased were at around 5,000. So let's write that. So first one is the raw materials. It's the inventory account. So 5,000 was paid. Okay, it went out of the bank. So you should remember, this is in account, this is out account for the bank. Then wages paid. Wages paid when at we know that it was 5,000 was for drawings and the remaining was only for wages. The wages was around 4,000. Okay, 9,000 minus 5,000 drawings. So the drawings was around 5,000. So the remaining was wages. Okay, so the drawings was around 5,000 and the wages 9,000 minus 5,000. That is going to be the wages that was paid. And then you have production expenses. Okay, so production expenses were so they were around 3,800. And then you have selling expenses, so that was 2,300. Here in this you should not adjust anything because this is not income statement. You will just reflect what is whatever has happened. Okay, so um, selling expenses were 2,300. Okay, now these are the things, and now let's add up, okay, and balance the bank account. So here on this side it is 20,800. It is a big amount. So we have to total whichever is on the big side. Okay, on the so 20,800. So if you add up the total, you get the highest on this side. So it should be on the same total on the other side. So the remaining you are going to adjust it as a balance. So balance brought down, balance carried down, okay, at the end of the month will be 20,800 minus of 5,000 minus 5,000 minus 4,000 minus 3,800 minus 2,300. That is going to be equal to 700. Okay, 700, and this will be the same as the balance brought down on the first, okay, on the first of that month. Okay, so that will be equal to 700. So this is how you will prepare the bank summary. Okay, so you can say this was the same thing on 30th September, October, on 1st October 2023. So 1st October 2023, the balance brought down was this much. Then we have Banuja is considering employing a part-time bookkeeper and accountant to manage his accounts. Evaluate Banuja employing a part-time bookkeeper. So what are the positive points if you employ a bookkeeper? You will have two things. One is you will have a good financial information and a lot of time can be saved, and you have sufficient accounting information to make a decision, right? So financial information, so Banuja would be supplied with financial information to enable him to run his business by the bookkeeper, and so he can also address all financial queries and exercise credit control policies to so that this 1,200 can be received. And also if it would free up Banuja's time to concentrate on the management of the business, accounting information. Example, trade receivables accounting information, if Banuja has, it would help him to manage the business, to implement any credit control policy, or he will know how to reduce his selling expenses and stuff like that. Then negative points for Banuja employing a timekeeper, bookkeeper, is he should know that there will be cost involved because he will have to pay the wage. Okay, wage cost will increase. So that is the thing. If he prepares, it will not incur him that cost. And but for the bookkeeper, he will have to pay the wage, and also his time might still get consumed because the bookkeeper has to provide all the financial information and accounting information, so that some time will be consumed, not all the time is saved. And in conclusion, Banuja should actually employ a part-time bookkeeper accountant to help him in the with the business accounting information.